prices to the moon. The beers them waiting for the crash coming real soon. But the OG consultant watching, he's seen it all before. Over 40 years in the game, he knows the real score. Bull versus bear, a real estate fight. He doesn't tell you who's wrong and who is right. In the Miami Condo investing club with no guess. He cuts through the noise and all of the mess. The Peter Zalewski Show. Big respect, OG in the game. Listen and learn the man's name. And up down. Peter Zalewski Show.
Happy Wednesday, Miami. This is the Peter Zalewski Show. It is a 1-hour conversation with somebody I think you need to know. Doesn't matter if you live here, you were born here, you just moved here, or you're thinking about coming here. I'm going to have a conversation with somebody that needs to be on your radar. Why? Because you might be looking for the types of services he offers. And who do we have this week? We are humbled to have nobody else but veteran real estate expert witness, consultant, analyst, you name it. The guy who talks to Wall Street, the guy who's been talking to Wall Street for north of 25 years, no one else but Jack McCabe of McCabeResearch.com. The full name of the company is McCabe Research and Consulting. But Jack has been following South Florida condo market for quite some time. He's been quoted everywhere. They got him on TV. They got him in the newspaper. They have him online. But Jack's carved out some time to sit down with us and have a conversation about where are we in the condo market? Does it remind him like where we were at the beginning of this century? What's the same? What's different? And more importantly, what's Jack up to? So we're going to get into all of it right now. I got him for an hour. The conversation is going to be fun. You're going to laugh. You might not necessarily agree with everything that's discussed, but that's the point of having a conversation and basically tuning in for the Peter Zalewski Show. Remember, every Wednesday I do this live at 4 o'clock. So let me go ahead and bring on Jack. Jack McCabe, how the hell are you, my friend?
Hi, Peter. I'm good. You know, I'm being the anonymous gringo in Mexico this winter.
Look at that. What, you left early for the holidays? Must be nice.
Well, Mexico's got a sweet spot in my heart, as it does many Americans and Canadians now, because they're moving down here in droves.
You know, Jack, you mentioned Canadians. There's a little bit of a pissing match going on between the United States and Canada. Canada doesn't want to become the 51st state. And as a result of that, we're hearing about the snowbirds who typically come down from Canada. They own condos in South Florida, especially in Broward County and Palm Beach County and somewhat Miami-Dade County. Some of them are supposedly that they're saying they're done. They're going to Mexico instead of South Florida. So your boots on the ground. Are you seeing a lot of Canadians down there in Mexico right now?
Yes. In fact, they congregate in different resort areas throughout Mexico. I'm in La Paz, a lot of Canadians here. Same thing in Cabo San Lucas and San Jose del Cabo, Puerto Vallarta. Also in Cancun and Tulum, San Miguel de Allende. But yes, there's many Canadians, and yes, they've had it with the U.S.
Well, with good reason. They definitely felt disrespected. Then you have all these tariff issues coming up. There's a lot of uncertainty right now in this marketplace going into 2026. I don't know what to expect, but I'm going to ask you what to expect. But Jack, I don't want you to tell us what's going to happen in 2026 until later on in the podcast. We're going to string everybody along. We want them to tune in and stay focused and concentrate because you got a lot of stuff to share. So I ultimately want to get to that point. But Jack, kind of where I want to start. We had a lot of people move to South Florida in 2021 as a result of the pandemic. If you remember, pandemic hits, the world shuts down in March or April of 2020. By 2021, state of Florida is saying, we don't care what the other states in the U.S. are doing. You don't have to wear a mask. And therefore, you can move to Florida. You don't have to wear a mask. Your corporation has said you can work from home because they were adapting. And more importantly, Miami Beach said, come on down. You can go to Ocean Drive and get on a cop car and you can twerk to your heart's desire. So a lot of stuff changed in 2021, Jack. And as a result of that, our demographics have changed. Our demographics have changed tremendously because we've gotten this whole influx of people coming from the Northeast and increasingly from Silicon Valley. So, Jack, they may not necessarily put you on the pedestal you need to be put on from an analysis and a consulting perspective. So can you tell people a little bit about what you do, how you do it, and more importantly, why you do it, and how long you've been doing it.
Sure. Well, I do market feasibility studies, economic impact reports. I appear on behalf of different builders and developers at governmental proceedings to acquire zoning variances as well as building approvals. So I generally work for commercial clients, although in the last year or two, I've been doing a lot more consulting with buyers and sellers of ultra luxury residential properties as well. Both in South Florida, we did work throughout the country, but based in South Florida, and also down here in Mexico now. So my background beforehand was I've worked for national home builders for about 20 years in sales management, operations management, and finally division management. And then I opened my consulting business in South Florida in 2002. Initially, we started doing apartment reports, rich text apartment reports on all the major complexes, 100 units or more in the 3 South Florida counties. And we covered over 100 fields of data. My subscribers at that point were apartment operators as well as sellers. And what we noticed through our research were there was many complexes that were trading hands and not being bought by other apartment owners, but by developers. And we determined a lot of these guys were buying these complexes to convert them to condo conversions. So then we started condo conversion reports. And then the paper started picking up our information. And I get a lot of requests to do the market feasibility studies for new developments. And so it all kind of just branched out from there. Through it all in 2005, I realized that there were 10 times as many condominiums under construction as what the normal absorption was. And on top of that, there was 25,000 more in the pipeline. And then all these condo conversions, it was a huge glut. And it was being driven by the toxic subprime, no money down, no credit check, no income verification. If you're a stripper, we'll make you 5 loans. It doesn't matter. And a lot of that was covered, of course, in The Big Short. But so we knew from our research that the market was going to crash. And I started talking about it in the papers. Well, I lost a lot of business. Builders and developers don't like you saying that the market's going to crash when you're going to do study for them. Then I started studying around the country in different markets, Las Vegas, California, Chicago, New York, areas that were also seeing a lot of new condominium development. And we were finding the same thing in those cities, that they were being driven by these fake mortgages that was really bank money, not real people's money. And so I knew it was going to be like dominoes. And because South Florida was the worst of all, it would start there and work its way across the country. So then I started talking about a real estate crash throughout the United States. And then I found out that many different foreign countries had invested in the mortgage-backed securities and the credit default swaps because the rating agencies were all giving them AAA ratings when they were garbage. They really weren't even junk level. So we knew that it wasn't just going to be a U.S. crash. It was going to be a global recession. And I took a lot of heat, as you know, when I started talking about these things. And then things started playing out as I had described they would. And at that point, then I started getting an incredible amount of media from all over, not just the United States and Wall Street Journal and New York Times, but, the London papers that, I was in documentaries in France and in South Korea and Australia. And I never wanted any of that, and I never looked for it. It just all kind of fell into place.
And what a run it was, Jack. What a run it was. Jack, let me ask you a question. if I can ask you to go back in time and look back at where we were then, how strong was the sell side marketing? Because I can tell you right now, because of the evolution of social media, the sell side people have this tremendous power now where they're putting up these short little video clips. They're, we're living in an era, I guess you would call fake news. And I'm not saying sell side is fake news, but there's a lot of different information hitting you. And the old format where you would pick up, whether it's Miami Herald, the Palm Beach Post, the South Florida Sun Sentinel, which are the major dailies down here, the Miami Daily Business Review, and South Florida Business Journal, all of them have sort of been weakened just because of the way things have gone. They haven't kept up with technology, the Facebooks of the world, the TikToks. So the whole game has changed. But I'm just wondering, back then, how much resistance did you get from, let's say, the sell side, whether it be developer, it'd be a realtor, or maybe it's just the homeowner who basically paid too much and they don't want to hear what you got to say?
Well, a lot, and it was also at seminars that I spoke at where my fellow analysts at the end in question and answer periods would get up and they'd do their damnedest to try and discredit what I was saying. Quite frankly, many of those analysts were in the back pocket of the builders and developers. They didn't want to say anything negative for fear they were fearful that they'd lose their business. I took that risk. I lost a lot of business, but it paid off in the end because when things did start crashing, and the hedge funds and the high net worth investors and the institutional investors came to me and said, look, we want you to tell us the truth because nobody else is doing it. We're getting all this fluff and puff, hot air bullshit. And what we want to know is what's really going on, because if it's good, we'll make money that way. And if it's bad, like you're saying, we'll make even more money.
Exactly.
So then my client base kind of switched to, I had a lot of hedge funds. I was flying to New York every year and speaking at the Yale Club and the Harvard Alumni Club to a bunch of top-notch former Ivy Leaguers working for hedge funds in their 20s, making millions of bucks, that were coming to hear me speak about the Florida marketplace. It was really heady stuff. But there was this big kind of transition at that point, and that's when we also saw the hedge funds and others step in and buy all the excess condos and put them into a rental pool. And it really did save the South Florida market. In fact, in several markets around the United States, I mean, you could almost make a case that between that and the Obama administration's economic policies, it saved us from going into a depression. I don't think most people understand that. So I got a lot of resistance. And like you said, it was mainly newspaper. There were television ads for different projects. They would put on big, sales presentations, multi-million-dollar sales offices. And that was kind of the marketing at that point. Now you see it spread throughout all these social media applications. And they're doing all kinds of things. I mean, very unique, I find them. But nonetheless, it's still a lot of puff and puff. It's all positive. You don't hardly ever talk to a real estate broker outside of yourself that really talks about the real market, not the smoke and screens market. So, and that's why you and I have always, worked together and we're of the same mindset, I think, because we saw the truth.
Well, Jack, I would say that you helped me to see the truth. I was running the numbers and doing stuff. You were the one who, you were kind of the grout. They kind of finished it all up where it could kind of make sense. I was just stumbling upon this stuff, but you were able to offer that context, the secret spice, if you will, that turned into regular chicken into suddenly spectacular type of chicken. So I do credit you for that. Jack, I can't believe how many years ago that was.
It's flown by, hasn't it, Peter?
It really has, and it's amazing. But Jack, we were running some numbers, and I'm feeling like it's '07 again. And I asked AI. I took some of the data we have, and AI says statistically, We're looking, at least on the condo side, it's looking like 2007 all over again. What the future is, who's to say? Last time was financing. You mentioned these, anybody could get basically a mortgage. Today, it's a little bit more difficult, but that being said, now you got the private money, Jack. Back then it was the FDIC type of stuff. Now it's the private money. This is the stuff that Jamie Dimon from JP Morgan came out and said when a couple companies went bad. He said, listen, when you put on the lights, it's not just one roach. You got a bunch of different roaches. And, I don't think the banking industry understands what's going on the private side. The FDIC type of institutions might not put money on the street, but it doesn't mean private sector can if they can get the right interest rate.
Well, and they're charging an arm and a leg, as you know, Peter. I mean, most all of the private investment groups, they're looking at 9 to 12% interest rates, not the current just under 6 that we have now. But it's difficult to get a mortgage through a normal process. We went through giving everybody and their brother money to tightening the screws to where only the most very well qualified could get a loan, and it knocked a lot of people out of the market. Now we've gotten back to some form of normalcy, but the interest rates are much higher than they were, even a few years ago when we were seeing 2 and 3% interest rates. Now they're hovering around 6. So payments are double. On top of that, you've got all the added pressure from increased property taxes, from the increased property values. The homeowners' rates have skyrocketed. Now in a lot of, especially the older, as you call them, vintage complexes, they're getting special assessments of, $50,000, $100,000, in some cases even more. And now we've got a lot of people are going to lose their health insurance because of what's going on with the federal government. So they're being pressured. It's not just food. It's not just everyday expenses, but now even healthcare. I mean, I've heard of people that, their health care was $400. They just got an estimate of what it's going to be for next year, and it's over $2,000. They can't afford it. And in South Florida, we had South Florida is going through a gentrification that began in 2019. We've always had a lot of senior citizens in Florida, probably more than any other state, and especially in South Florida. And they bought, these lower priced condominiums. Many of them were situated in great locations because they were built, in the 60s and 70s and even the 50s. And their bills have been fairly low. So they could live once they retired on a fixed income that didn't go up or down. But now they're getting bombarded with huge fees that are far more than what they can afford, far more than what they're seeing in increases in Social Security. For instance, this year it's going up 2.8%, but for most people, their Medicare coverage is going up more than that, so they're actually losing money. And we had all the realtors talking about 1,000 people a day are moving to Florida. Wow, how incredible. And they're all coming down from the Northeast, and they're all loaded with money. And there was a lot of truth to that. They're definitely higher income. They have more assets. They're selling houses that are far more money. But what they didn't understand at the same time is a lot of people are being forced out.
Exactly.
And so for as many people as been moving in, we're losing what are the real Floridians, the ones that have lived there for years, the ones that have paid taxes, have built the roads and the schools. And to me, it doesn't seem right. It doesn't seem fair. Now we're seeing some changes in all the variables that made this huge migration from the Northeast happen. They're being called back to their offices. That's the big thing to begin with. The companies have said, we're not paying for empty offices anymore. You no longer can work remote. And so they're stuck. They're gonna have to move back, or they're gonna have to find a different job. On top of that, Most all the new construction in South Florida has been $1 million and up. You
Yes.
know, it's try and find a $350,000 condo, and you're talking about a 600 square foot studio. So only the rich can afford it. And I think even in the 1 million to 5 million, you could even say maybe up to 10 million price range, they're struggling.